Welcome back. Abu Dhabi Global Market and Paris EUROPLACE, the organisation in charge of developing the Paris financial marketplace, have signed an MOU to enable closer collaboration on possible joint financial activities. The move looks to form common interests that support growth and development in both financial ecosystems in both France and Abu Dhabi, and to also establish a strategic platform for both parties to better understand and share information on banking, financial services, securities legislation and regulations in each market. As a part of the memorandum, ADGM and Paris EUROPLACE will explore mutually beneficial projects and discussions to facilitate long-term investment opportunities, infrastructure financing, new innovations in areas of fintech and green finance. Both authorities are also prepared to develop relevant activities and events that foster financial innovation and closer regulatory cooperation in both jurisdictions. Officials stated that as the first financial marketplace of the Eurozone, Paris has strong strengths to share with Abu Dhabi, and that this agreement paves the way for concrete joint initiatives in the respective fields of expertise of each country. Rents in Dubai's skyscrapers are 6 times cheaper than in Hong Kong and 3 times more affordable than London. That's according to Knight Frank's Skyscraper Index. The report shows that rents in Dubai's tall towers stand at 159 dirhams and 65 fils per square foot. That's compared to the equivalent of 966.13 per square foot in Hong Kong and 462 dirhams and 42 fils over in London. Officials were quoted saying that over the last decade, Dubai's economy has evolved significantly off the back of modern infrastructure and business-friendly regulations. However, the first quarter Prime Global Rental Index, released on June the 30th, fell for a third consecutive quarter, with rents falling on average by 0.5% in the year to March 2016. Mecca was the only hotel market in the Middle East to see an increase in revenue per available room during the first half of Ramadan. That's according to the latest report. However, Dubai's ADR remains among the highest for major global markets. STR released the results after comparing preliminary data for 6 hotel markets in the Middle East from June the 6th to the 20th, with the first 2 weeks of Ramadan last year. The figures showed that Mecca experienced a 1.3% increase in occupancy and an 8.5% increase in average daily rate, leading to a RevPAR increase of 9.9%. Dubai hotels recorded a 2.9% increase in occupancy over the 2-week period, but ADR was down 9%, resulting in a 6.4% decrease in RevPAR, while Muscat, Oman, experienced the steepest RevPAR decline during the 2-week period, falling 23.4%. This came off the back of an 11.4% decrease in occupancy and a 13.8% drop in ADR. The GCC region's ad spend is poised to grow faster than the world average over the next 5 years, with a projected 25% growth this year. According to a study by Orient Planet, internet advertising expenditure is forecast to grow globally at a compound annual growth rate of 11.9% until 2020. Global ad spend in 2015 was recorded at $531 billion, with online ads making up 27%. As for the Arab world, the report revealed that internet users in the region are expected to reach 197 million by 2017. And with internet ads in the GCC set to grow 20% in 2017. This comes as increased internet penetration in the Arab world has led to a jump in the GCC region's online ad spend this year. Research officials were quoted saying that the shift towards a more knowledge-based society has also driven growth in the market. And the rise of innovation programs have also shown organizations how their company can greatly benefit from using online advertising to promote their products and services.